506% profit. We're starting this report discussing a trade open on February 25th, which is now at a 506% profit and counting. Hi, this is Paul DeCaro with the March 20th No BS Outrageous Profits State of the Markets. You know, it's no BS because unlike mainstream media, we don't like hype and sensationalism. We don't trade based on emotions or personal opinions. We continuously analyze the real trends, and our models tell us when to get in and when to get out, which allows our subscribers to successfully and easily position their portfolios for outstanding and reliable profits. Please note that in this report, comments on trades usually refer to our option trades, and the general comments refer to the underlying index or equity. Also, these are not personal investment recommendations. We discuss what we are doing so you can form your own opinions. And now the markets this week. Unfortunately, the market nosedive triggered by COVID-19 continued this week. The hope-inducing reversal on Tuesday was quickly obliterated in the following days, and the market closed on Friday very close to the weekly low. With such a large portion of commercial and industrial activities forced to stand by, it could hardly be any different. Now we'd like to discuss briefly the practice of taking short position in a bear market, which is nothing new, but it may be interesting to see a real-life, very current example, just to prove the point that there is a good side even in tragic moments like this. Look at the blue arrow in this chart, highlighting our latest trigger to short, which is the smaller red down arrow. The signal was automatically generated by our system on February the 25th. It could have been implemented in two different ways, depending on the trader's personality. A conservative portfolio would have closed any long positions and sought shelter in cash, avoiding the coming large market losses and awaiting for things to change. A more aggressive portfolio would have also opened a short position. For example, a bear positions with a SPY April 330 put would now be at a rather impressive 506% profit in less than a month. One of these contracts, bought at $1,620, is now valued at $9,819. Food for thought, huh? Now this is an hourly chart of the S&P 500 index, showing how volatile the market has been this week, going up and down, but mostly trending down. Even in such a difficult situation, from those red arrow signals, you can see how our system is pointing out good points of entry, even in the middle of an undoubtedly very challenging market flow. And this proves one of our fundamental statements, that we are really not at the mercy of the market. Markets do not turn against us all of a sudden, as they say. Investors incur major losses only when they are not properly informed of the very current market's evolutions. Bonds have been extremely volatile too this week. After a plunge to long-term support, they started bouncing back strongly by the end of the week. Time to go long again. Gold, as measured by its futures and ETFs, was beaten down last week and spent this week in an indecisive range. This is at odds with the reported strongly increased demand for physical gold. This discrepancy is of urgent interest to those who are looking at bullion acquisitions. Crude oil continues its dramatic fall as the Russia-Saudi Arabia price and production confrontation remains far from resolution. Our short on USO is now at about 110% profit. Real estate continues falling in sync with the S&P 500 equities. Real estate investors may be looking at a good opportunity to acquire some bargains in this distressed market. This is it for this week. We hope these comments may help you in your investing. Please share this page with your friends and family and give it a thumb up. We need your support to help more and more fellow investors design the right trades and enjoy big profits. Thank you very much for your support.